Hello, everyone. Thank you for joining us and welcome to this special presentation of Specialist Trading Elite Stock Trading College. Today, I want to talk to you about a special program that we only present and give roughly every 2 or 3 years. So we're presenting our Elite Stock Trading College, and it couldn't come at a better time because with all the action that's been going on in the market, I know a lot of you are having very difficult times trying to trade in the market in the new environment of going lower. So the best thing about our stock college is that it's going to present stock strategies that work just as well in bull markets as they do in bear markets. So a lot of our stock traders that took the course roughly 2 or 3 years ago are doing just fine in this current down market condition. So we want to go into detail, and today's going to be a little bit different from what I usually do. I'm going to, rather than teach you a class, I'm going to just show you and go into detail what exactly is going to be included within this great college course that we're giving today. Once again, for those of you who are new to my presentations, I am Stephen Primo, the president and founder of Specialist Trading, and we are an educational company, as you'll see in just a few moments as I present all the things I'm going to be teaching you in the college course. We're all about teaching you how to trade so that ultimately you can make your own trading decisions. It's our opinion at Specialist Trading that the reason why most traders fail is not because you're in a bear market or because you're going straight up or straight down, or if it's bad conditions for trading and no volatility. It's about really you not relying on your own set of specific tools. You're relying on someone else to tell you what to do, and they really have no more validation than you would. So the best thing is really to train yourself from someone who's been involved in the markets for roughly 39, nearly 40 years. Take the information that I provide you with, all the insights, wisdom, and trading strategies that I've accumulated, and then learn it and be able to make your own trading decisions. That, in our opinion, is ultimately how you're going to be successful. I've been trading for roughly 39 years. I started on the trading floor of the Pacific Stock Exchange. I made markets in roughly about 50 stocks. I traded through the crash of 1987 and the bull market that followed. So I've been involved in just about every market environment you can imagine. And I've seen what works and what doesn't work in terms of consistency. So I only teach and mentor my students the things that I have found to work and have some measure of consistency over the years, regardless of what the market is. And that's what we're going to be presenting in our stock college. I'm going to show you a lot of detail about what we're going to be covering in the college, but as always, we are required to show you our disclaimer. So please take a moment to view this. I'm going to show you some performance results, some actual trades that currently happen with the strategies we'll be presenting. But please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. Once again, we are required to show you this. And as you're taking a moment to view our disclaimer, if you haven't done so already, I would like to invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down at SPCLSTTRADG. I post daily information, anywhere from daily financial wisdom to actual signals that our strategies have generated. So there's a lot of great free information, although it is rather limited. So if you'd like to get a little bit more detailed information about what we do, myself, and what we teach, our sister site, which is Pro Trader Strategies, has put together a Facebook page. And you can simply log on to Facebook, go to protraderstrategies.com, and there's a lot of information, a lot of videos, and a lot more information about what we do and some specific courses and different discounts to all of the packages we have. Okay, so lots of ways to find out about what we do. Now, I want to start out by sharing with you what I learned trading on the floor of the exchange. My first year or two on the floor, even though I was making markets and I was working and had access to all this information about where orders were being placed and what the institutions were doing, I struggled tremendously because I was really out of sync with the market, and I was buying when I should have been selling and doing vice versa. And so I was doing probably the way most traders manage, where I'd have a couple of really good trades and then I'd give it all back on the next one. And I really had a lot of difficulty trading when I first started out on the floor. So here's what I learned trading on the floor, and I specifically learned this from my mentors, and this is what I teach all of my students. They said, Steve, in order to be a successful trader, successful trading should be non-subjective. All right, what does that mean? Well, it means that two traders should be able to look at the same chart or at the same setup and come up with the same conclusion. In other words, there shouldn't be any large amounts of subjectivity involved where there's too much information to be analyzed and come up with, such as news or such as looking at a ton of indicators. All right, we want things that are cut and dry so that everyone will come up with the same conclusion. Also, they said trading should be consistent. Now, I know a lot of traders think, well, consistent means that you're always winning. That's not what consistent means. We've been in the markets long enough to know that losses are just natural. They're part of the game. It's part of doing business. The important thing is that you should have some type of methodology, some type of strategy that has a 2 steps forward, 1 step back approach, because you will have losses from time to time. Look at any person in sports, anyone in the media, anyone in entertainment industry. Everyone, has certain slumps or certain parts of their career or certain, time periods where they're not doing very well. That's just natural. The thing is to be able to snap back and bounce back from those periods. So that's what we're looking for, and that's what we feel we have on our strategies. They're very consistent. Once again, not 1 step forward, 2 steps back, the way most traders trade, but 2 steps forward and 1 step back. They also said trading should be as simple as possible. Look at your trading. Do you have tons of indicators? Are you weighted with, with anticipation for every news event that's going to come out and then try to figure out what the news means? Are you in 20 or 30 chat rooms or following the tons of trading gurus trying to decipher what they're telling you? Most traders trade that way. It's extremely complicated. In fact, the majority of traders trade this way, even the ones that are teaching you. Most traders that have been trading for relatively a short amount of time, from 5 to 10 years, have very convoluted, very complicated trading plans. It's the traders who've been trading for 30, 40, 50 years that have extremely simple plans, maybe 3, 4, 5 rules tops that are extremely simple. You have to keep things simple in order to get on that road to consistency. And then lastly, in order to be a successful trader, you should trading should make you a part of the process. So in other words, you never want to be taking your cues from someone or something outside of the market. In other words, so many traders can't decide what to do until they go to that trading room to tell them what they should buy or sell, or until they look on TV and see what someone's touting on the news channels. That really is a recipe for disaster. Why? Because you've taken yourself out of the game. You want to be a part of the process. You want to understand and absorb all the information and then make your own decisions. So go back and look at these 5 points here and see if your trading is anywhere along these lines or totally out of these lines. I can almost guarantee you that the majority of losing traders are because they don't follow these 5 rules. As we said, we are an educational company, and my goal is to teach you, not to trade for you the way a lot of other educators do, where they simply tell you what to buy and what to sell, what the best time frame is, what the best market is. We don't believe in that. What we want to do is teach you how to trade so that you can ultimately make your own decisions. This is the way I was taught, this is the way I was mentored, and this is what we pass on to all of our students as well. This is the same edge that was able to turn around so many traders in our courses, and this is the same edge that I'm going to be presenting to you as well. Okay, so I'm going to share with you exactly what is in our new stock college. As I stated, I'm really excited about this because we only present this maybe once every 2 or 3 years. So we're really looking for something that's not going to be involved every couple of weeks. We want this as a special thing. So I'm excited to be presenting it once again. I'm going to give you a lot of information now. So if you have any questions, kindly wait till the end of the presentation in about 20 minutes. There's a little button I have to press here in order to see all your questions, and I won't even open it up till the end. So just wait off on any questions that you may have. All right, so let's first talk about tools and techniques. Here's what I'm going to be presenting with you. These are all things that I learned on the floor that really have helped me to become consistent in my trading. I'm going to share with you an edge. This is our first edge. This is a simple tool designed to place you on the right side of the market in any time frame and in any direction. Most traders are usually on the wrong side of the market. How many times have you bought something and it goes straight down? Or you've sold something and the minute you get in, it goes straight up? That's because you're on the wrong side of the market. Let me show you what I mean here. Here's an example here with UPS. There's an older chart here of UPS. Now, looking at this chart, you see it's gone straight up. The stock has just literally gone straight up, and then all of a sudden it starts to roll over and really falls out of bed. At this point, probably you're in some chat room or someone on TV says you've got to sell this. It's probably going to come all the way down to the lows again. So you decide to sell UPS, okay? Now, this is what happens to most people. They either exit their position or else they go short, they buy some puts, and then look what happens, okay? It's because you're on the wrong side of the market. And the whole time, actually, you should have been looking for buy setups. We show you with this simple tool that you should actually have been looking for buy setups. And one of our strategies, which I'll be talking about later, actually generated a buy on the very next bar right here. Or this scenario in OI, as you see here, the stock has been going lower. Let's say you're in some chat room and they say, well, Steve, there's very big support here at this level. Some Fibonacci or some institutions are creating a nice support level right here. And let's just say on the short term, you're looking at this downward trend and we broke it and closed above. So you're very bullish on OI. So you jump in and buy and look what happens. Okay, look familiar to anyone? Well, with this simple tool, this number one edge I'm going to be sharing with you, you will never have even considered buying. In fact, you would have probably gone short somewhere around here, if not there, closer to these levels as well. Now, that's edge number one. Let's go on to edge number two. Now, this is a simple technique designed to fine-tune your entries, resulting usually in high percentage trades. Many traders can be on the right side of the market, but their entry is faulty. In other words, they have a wrong entry plan where they get in too soon, they get in too late at the wrong place. So it may look as if you had a winning trade later on, but you just entered at the wrong place, you got scared, and you stopped yourself out. Here's a perfect example as we look in this older chart of Tiffany here. Let's just say, for example, you're looking and you're very bullish on this stock, or perhaps your strategy or system gives you a buy signal, but you have to break out above this level. All right, kind of a double top or kind of a breakout strategy you have. So you wait to see that you close above this level right here. So on the very next bar, you did close. So you jump in and buy. Okay, well, look what happens the minute you get in. All right, now at this point, you probably got scared. You stopped yourself out with a loss. You said, boy, this strategy I purchased or this teacher I'm going to in this chat room doesn't know what he's talking about, and I should have never bought this stock. Well, not so fast, because maybe it really was a good idea to buy TIF, but the problem was your entry plan was faulty. With what we're going to be teaching you in the course, you would have actually still been long the stock, but you would not have entered until down here. And this was, as you can see, using this simple technique would have had you entering much lower. You're still in a buy setup, and you would have had a nice trade there. So see, it actually wasn't wrong to be long this stock. It wasn't long either your strategy or the person you follow actually had a good idea to buy this. It was just your entry plan that was faulty. We teach you this specific technique that can enhance any strategy you trade or any technique. So those are edges 1 and 2 that we're going to be teaching and sharing with you in the course. We're also going to be talking about exits. I'm going to show you a variety of both aggressive and conservative exits. Remember, as an educational company, we don't give you systems to trade and say, these are the rules, follow them, and that's it, good luck. What we're trying to do is educate you and give you all the different variables and options so that you can formulate your own trading plan. That's why we give you different entry techniques, different edges, and we give you different exit techniques as well, so you can decide whether you want to trade aggressively or conservatively. No two traders need to trade alike. That's, once again, a recipe for disaster. You never want to trade and copy or mimic someone else. You want to make your own trading decisions. So if you're the type of trader, as we see here in this older chart of IWM, that's the ETF for the Russell index, we generated a buy signal with one of our strategies. If you're the type of trader that likes to get in and out rather quickly, well, you would have used exit plan number 1, and you would have had a nice gain here in 1 day. But let's say you're more of a swing trader, you'd like to stay in a little bit longer, well, you could use exit plan number 2. And then ultimately, if you wanted to try to squeeze out as many gains as possible, well, then you could use exit number 3. And see, each one is for a different type of trader. You don't have to use one and say, well, this is what the system calls for. It can be whatever one you'd like to. A number of our traders actually use all 3. They'll exit a portion of their position here, then another portion here, and then get out of the trade entirely here. Or still others will just use these as stop placements. They'll once we get to exit number 1, they will move their stop to unchanged. Once we get to exit level 2, they'll move their stop to exit level number 1. And then once we get to exit number 3, well, that's where they'll exit everything. This is what we usually tell most of our students and suggest, because oftentimes when you get to exit level number 3, the trend changes. And it's the same way if you are trying to go short. In this older chart of Cat Tractor, we generated a sell signal using one of our strategies. If you wanted to use exits 1 and 2, well, you had nice profits here going short about 2 days later. But if you wanted to squeeze out as many gains as possible, you'd choose exit number 3. But once again, as we always suggest, remember this is not a rule but a suggestion, it's best to get out at exit number 3 because the trend will often change. Now, not only do we teach you about different exit plans, we also share with you different stop placement levels. We have 4 initial stop placements. Once again, we don't just say this is the way you've got to trade it. You must always place your stop here. We know that everyone's different. Everyone has different capital restrictions. Everyone has different risk parameters. Some people like to trade conservatively. Others like to trade aggressively. Some people like to take small risk. Others like to take large risks. So we have 4 different initial stop placements. We also have 3 different moving stop placements. So this is once you're in the trade, and for those traders who like to stay in longer, we have 3 different ways to track the trade using our different stop placement techniques. These are all different techniques and different methods and just different ideas and things that I learned while on the floor some 40 years ago. Now, we go to strategies. These are actual trading plans. Once again, as you see here, I say strategies. We do not teach or trade systems. We do not believe in that because that requires everyone to trade the same way, to follow the same rules regardless of the market environment. If you notice, most systems work really well when the environment totally complements the system. But once the environment of the market changes, as it has in the last couple of weeks, most of these systems just go to the wayside. They blow up. It's because there's no room for any type of input. Remember, we want you to be a part of the process. And once you are a part of the process, you notice that the environment has changed. Therefore, you can adjust your trading plan. That's what strategies are. Strategies are rule-based, just like systems, but whereas systems are 100% rule-based, strategies are about 70% rule-based, and then they give you about 30% discretion for insight, for changing your trading plan, to either change your exit or change your entry or change your stop placement. Now I want to share with you 2 of our most consistent strategies for stock trading. The first one is strategy number 4. You've heard me speak about this before a lot of times in presentations. It is probably our most consistent strategy to date. Okay, it's a simple pattern recognition strategy. I can't give you any of the rules here. I know a lot of you would like to get the rules, but we're going to go over in detail what the rules are in the course. But let me just show you how well it works. Here's a chart in PSA starting out in September, going all the way into the beginning of the year. As we see, we're in a nice uptrend, and looking in hindsight, someone would say, boy, I would have loved to take advantage of this, but now the market's gone south. It would have been nice to purchase some shares of PSA, or even, we know it's an expensive stock, just to purchase options, call options on this. Well, you can do that with strategy number 4. Once we apply the strategy, we see that we had 3 signals, the first one in September, another one in November, and the last one a month or 2 ago in December. The first one would have given you nearly 25 points to work with to the upside. The next one gave you over 16 points, and the last one would have given you over 10 points. Okay, you can decide for yourself if you want to stay in and try and squeeze as much profit as possible, use a trailing stop, or just get in and out rather quickly. Totally up to you, but we give you all the fine-tuned entry points. Same thing with the downside in MANH, as we see here. This is coming into this past week up until the 13th or 14th, just a week ago today. Obviously, the market's been heading lower. A lot of people say, boy, there's no way to be consistent in a down market the way the market turned around here. That's not true. Strategy 4 has been generating some great results this past couple of weeks. As we see here, there were 2 great signals, one on the 17th of December, another one on the 30th. The first one could have generated a quick 4 points if you wanted to get in and out quickly. The next one would have generated 14 points. Or you could have stayed into this one as long as you'd like, use our trailing stops, and most likely still been in the stock. Okay? Now, we don't just stop there. We can trade this with stocks. We can also apply it to ETFs, as we see here in the spiders. Okay? As we see, the spiders were kind of going in a range at this level here towards the end of December, and then as we have seen the last 2 or 3 weeks, the market has gone straight down. A lot of people have been saying, boy, when the market condition changed, I couldn't make any money. Well, if we would have applied strategy number 4 to the spiders, you would have known as far back as the middle of December that a sell signal was generated. And had you stayed in up until this past week, well, that would have been 20 points to the downside that you could have generated, you could have had to work with. So don't let people tell you that when it's a bear market, or we're going into a bear market, or that conditions have turned negative, that you can't make money. It's not true. In fact, it's almost easier sometimes because the markets move so quickly. Now, that was strategy number 4, which is one of our premier strategies. We will be presenting that in the college. We're also going to be sharing with you a very often overlooked strategy, but probably just as well as strategy number 4. That's strategy number 8. This is probably our most overlooked strategy and very underrated, but a great strategy. It was specifically designed for stocks, but we've seen that it works well in other markets, but it works the best in stocks. Let me show you some actual signals that were generated. Here's first solar. As we see, this was coming into the beginning of the year. This market was going straight up. If we applied strategy number 8 signals, well, we had 3 signals, one in October, one in November, and then middle of December. Each one would have generated gains from 8 to over 14 points. And it works on the downside as well. Here is the best thing, in my opinion, about strategy number 8. Many times when people think a market is too overbought or too oversold, things that we really don't look at, strategy number 8 will continue to generate signals in that direction. So you never have to feel as if the market has run its course. Oftentimes, it will continue going, and strategy number 8 will really generate some really nice signals. Here's a perfect example, an AKAM. As we see here in the beginning of November, some news or some event caused the stock to really gap down 15 or 20 points. At this point, most traders would be saying, well, I'm sure it's going to have a nice bounce to fill that gap, maybe part of that gap, so I should be looking to go long. Not true with strategy number 8. Strategy number 8 saw that there was still room for this to go lower, so it began to generate sell signals. In fact, it generated a total of 3. 3 days after that gap down, it generated another sell signal on the 30th of October. That would have generated close to 10 points to the downside. Then on the 24th, Christmas Eve, and then on New Year's Eve, it generated 2 sell signals and then down nearly another 9 points coming into this week. You can also use these strategies intraday. We know a lot of traders don't just trade stocks on a daily basis, they also trade them intraday. Here's a 5-minute chart of the QQQs. Here was a great setups here to go short. This was on the 15th. As we look here in the lower left-hand corner, this was just last Friday. 2 sell signals were generated to go short, both using strategy number 8. You can also apply any of these strategies to monthly charts, weekly charts, so it really doesn't matter. We have a number of traders who like to use them on weekly charts to get those nice swings for longer-term trading. We also have people that apply these to tick charts. There's absolutely no difference which time frame, which direction you want to be trading them. Now, we're adding as a special bonus our roadmap for any market, any direction, or any time frame. This is not a strategy. This is not some type of buy and sell tool. What it is a roadmap. It's a directional tool that I'm extremely proud of, because this is something I was able to learn on the floor, but we have turned it into an algorithm that is a color bar algorithm. It's our pet D, and it basically stands for the Primo Early Trend Detector. Even though I didn't come up with it, we are the ones at Specialist Trading that generated it into a proprietary color bar algorithm. So let me show you exactly how it works. When you see a series of green bars, it's just basically telling you you're in an uptrend. And when you see a series of red bars, you're in a downtrend. Well, we're offering this in the course as well. So you can now really fine-tune the direction of the short-term trend along with all these strategies and techniques that we're going to be teaching you. See, the beauty of the Pet D, as you see here, is that it tells you which direction you should be trading. Once you know that, you can apply virtually any strategy to that direction. So it doesn't have to be one of mine. It can be something else that you're trading currently that you're not having the best results with, but it will put you on the right side. As you can see here in this chart of WYNN, W-Y-N-N, it also works to the downside. When all the bars are red, even though you may have a nice little bounce here, the red bars are telling you that we are still in a short-term downtrend. You do not get sucked in and think that we've bottomed out. Whatever someone is telling you that there's some support here or we've hit some Fibonacci retracement, don't listen to it. As long as the bars are red, you should be shorting into this bounce, and look what happened. Now, a lot of traders say, well, Steve, yeah, but many times the trends will change, and all trend directional tools are usually lagging indicators. They'll get me in and out a little bit too late. That's true. Nothing works perfectly that gets you in at the bottom and out at the top. But the beauty of the Pet D is that it's so fine-tuned, it really is sensitive to these trend changes. Let me show you here in this older chart of HRB. As we see here, we have a nice move to the upside, but then it quickly stalls out and it goes straight back down. Well, how could we have known to get in way here at the bottom and then try and get out somewhere here before the floor fell out? Well, we just simply apply the PET D. As we see here, all the time we were going up, as far back as when the stock first started, we were green, okay? And then right here, before we really started to go down, we had a confluence of red bars telling you to exit, and if you were more aggressive, to go short, and you would have missed all this move to the downside. Now that's for daily bars. How about for long term? Okay, this is another graded added a bonus here for having the PET D, because it can also be applied for long term trading. We know that not everyone trades intraday or trades daily bars. A lot of people just like to look at their long term portfolio or stocks in their IRA account. Well, how would you like to know when the market made these tops in the dot-com crash or in the banking crisis? And how would you like to know if we are making one right now? Well, here is a monthly chart of the S&P 500, okay, the dollar INX on the charting software. Okay, as you can see, we're going back to 1995. As we were going straight up before we hit the dot-com crash, the majority of the bars were green. As we were going lower, all the bars were red. And then we started going back up until we hit the banking crisis in 2008, and then the bars changed, okay? And we've been going up ever since. But what about now? Well, here's what we do with the long term. We want to see at least 3 bars of the same color to tell us that the trend has changed. So even though we're going straight up here, we had a couple of bars that were red. That's okay, as long as they're not 3. If we had 3 red bars here, this would have been signaling a downtrend. But as you can see, we didn't get 3 red bars until right here, and that was the very beginning of the downward move. So you could have bypassed all of this move for the next couple of years. And then once we got 3 green bars, you could have gone back into the market. Now, in 2007, 3 red bars were generated once again by the PET D. You would have missed the next year and a half downside here in this crash. And once you had 3 green bars, you're back in. Now, as you can see here, we have 1, 2 red bars followed by a green, another 1 red bar, but we've never had 3 in a row. I specifically left out the last 3 months of this chart. Why? Because that's only for people that have the PET D. So if you have this long-term trend identification tool, you could see right now whether we are going into a bear market, or perhaps we're already in one, or whether we're going to be going into one by the end of this month. The people that have the PET D already know this. Once you become a member of this Stock College course, you'll know, and you can hopefully bypass another crash if we do go into a bear market the way we did here in 2000 and then again in 2008. Now, we also have techniques for trading with the PET D. All right, that's long term, but what about when we're trading? What about we can apply it to our strategies? Well, here's the way we do it. When we get a buy signal, regardless of what strategy we're using, we want that buy bar to be green. And when we get a sell signal, we want that setup bar to be red. If we do not get those in conjunction with one another, we do not take the trade. This has given us a higher level of consistency. So as we see here in this older chart of the industrial average, we had 4 buy signals generated using strategy number 4, I believe. And you see each one of these buy signals was met with a green bar by the PET D. So this was giving you the confidence to go long. Now we know this is an index, the dollar index, but you could have used, or I should say the industrial index, but you could have used this as some type of a tool to tell you whether the market's going to be going up or down. But it works just as well for stocks. But I specifically wanted to show you this because on the 4th buy signal, we needed this to be colored green the way the prior 3 were. But it wasn't. It was colored red. So this was giving you a signal that perhaps the market was going lower. And I believe this was last August. And look what happened. Okay? So this is how good the PET D is. This is coming and included in the course, and this will really heighten your levels of consistency regardless of what strategy you trade, what time frame you trade, and what market you trade. Okay, now as I stated, these strategies, they all work the best with stocks, and that's what we're going to be presenting in the college. But you can also apply them to ETFs, as you've seen, futures, Forex, and even commodities. In fact, let me show you some examples here. Here's the Canadian dollar, all right, coming into this week. The Canadian dollar has been basically going straight up since October. Is there any way that we could have applied any of the strategies? Yeah, all you have to do is apply strategy number 4, and you see here that we have buy signals generated all the way going back to November. Okay, so this is really just tons of pips in your direction. So that's in the Forex markets. We also can use this in commodities. Everyone's been talking about oil. Crude oil keeps going lower and lower. Everyone's looking at news. Everyone's looking at events of why oil keeps going lower. at Specialist Trading, we're not concerned with that. Remember, we said just keep things as simple as possible. Don't try to overanalyze things. Just listen to what the market's telling you. The entire time we've known the market's been going lower, so all we've been doing is just selling. And once again, strategy number 4 has been generating sell signals all the way down. In fact, the last sell signal was generated just a few weeks ago to be short crude oil. Okay. So the beauty of these strategies, they can be applied to any market, any time frame. They work the best with stocks, but you can still apply them if you like to trade commodities on the side, or like to trade the forex, or like to trade futures, the E-mini futures. Now we're also adding 2 extra bonuses. We're not just going to stop there. We've already thrown in tons of information with the Pet D, with the strategies, with the techniques. We are also throwing in an option trading class. We're going to have one class specifically devoted for people who like to trade options. We will be talking about all the different ways in which you can trade options and apply options to our specific strategies. We know a lot of traders, say, well, Steve, a lot of these strategies work great, but I'm not sure how to really trade them with options. I'm more of an option trader. We will be teaching you how to trade these with options, with different strategies and different techniques. We're also going to be sharing with you a great technique, once again, something I learned on the floor, called ATM. This is our Advanced Trade Management. So what exactly is this? Well, many times you will see stocks or trading plans or methodologies work fantastic, and other times you'll see that you're in this long series of losing trades, of losses, or a downtrend. Well, ATM is just simply Advanced Trade Management. It's basically telling you when you should be trading the strategy and when you shouldn't. It's telling you when you should be in the market and when you should be entirely out of the market. Here's an example of actual signals that were generated. I believe this was strategy number 4. As you can see here, when the strategy is perfectly in sync with the market, you get a number of consistent signals. All the sell signals were profitable, all the buy signals were profitable. But oftentimes the market will go into these crazy periods, not just in down markets, but sometimes in the summer you get these type of rangy markets where these are the signals that have generated. Okay, nothing works. All the buys are losses, all the sells are losses. Okay, it's the same exact strategy, same exact market. Well, ATM is designed to keep you out of these markets. It's a simple formula we teach you how to construct so that you know when your strategy is in sync with the market and when it's not, and when to trade it and when not to trade it. This is a great extra bonus. It's something that we actually are going to create a full course on, but we're throwing this just into the college itself. All right, so let's go over the college curriculum before we go into any questions and answers at this point, just to share with you once again and to sum it all up what we're going to be offering you in our stock college. Week number 1 is the foundation and building blocks of stock trading. I'm going to share with you all the techniques and just concepts and philosophy that I learned on the floor about what you should be focusing on, but more importantly, what you shouldn't be focusing on. The foundation and the building blocks so that you can really be prepared and ultimately know what our concepts are to go forward with these strategies. Then we'll go right into strategy number 4, week 2. Once you have the foundation and the concepts under your belt, now we can start learning how to trade these strategies, because they're going to be different rules than what you've been taught before. We're not going to be concerned about news. We're not concerned about tons of indicators. We're not concerned about what the market is doing overseas. We don't care about that. We're just going to show you what to look for, what the market is telling us. One of our best stocks strategies in terms of consistency is strategy number 4. That's the first one we're going to be going over. Now in week 3, we're also going to be going over stock strategy number 8. All right, we're going to be sharing with you all the rules for this specific strategy, and so you'll have 2 strategies under your belt by week 3. Week 4, we go into the Pet D and how to apply it either with these strategies or on its own. It's a great extra bonus. We have a full course that is just dedicated to the Pet D. We're including this within our stock college. Then we'll go into options trading. Once again, for all you traders who love trading stocks, but you don't actually purchase the individual equities, you like to trade options, we'll devote the entire class just to how you can apply options to all of these strategies and techniques. And then finally, in week 6, that's going to be Advanced Trade Management. That's the ATM. We'll teach you that specific formula. Once again, this is a full course with it in itself. We're including this within the stock college, and you'll learn exactly how to put that together, and then we'll go over any questions or anything that you may have in addition to all of this at the end. So 6 weeks of training with live classes with yours truly, and I will be teaching you and I'll be your mentor over the internet, an online course. Now, here's what traders are saying from the last college that we had. We had a number of great testimonials where traders, for the first time, were able to become consistent with their trading. But I want to share with you one particular. This comes from a hedge fund trader. Okay, this is from PG with Bikini Analytics. He said, "Primo's mentoring has been a cornerstone of my career over the last 25 years. As I type this note, 26 of 40 positions in our portfolio are from a swing strategy of Primo's that I specialize in. Primo's greatest gift was separating me from my emotions and teaching me to listen to the market." And that's really the concepts we go over, because most people are, once again, are listening to outside sources. They're listening either to what people are saying in a chat room or a trading room, or they're listening to some so-called trading gurus either in a webinar or on TV. We really are the opposite. We teach you to listen to the market, and then you can make your own decisions based off of the information and the tools we give you. So remember, in order to be successful trading should be non-subjective. Two people looking at the same chart to come up with the same exact scenario. Now, so many people will look at support and resistance or Fibonacci levels or different types of ways of trading, tops and bottoms, and everyone will come up with a different scenario. When you learn all the techniques and concepts at specialist trading, all of our students see the same thing. Now, it's up to you how you decide how you want to implement within that, all right? Your trading should be consistent. We take pride in knowing that all of our techniques are extremely consistent. We have the testimonials, we have all of the people to back us up on that, because so many traders have told us that, for their very first time, they've been able to consistently generate gains. Remember, it's not about making money on every trade. It's about 2 steps forward, 1 step back. Also, trading should be as simple as possible. Most of our strategies have no more than 5 rules, maybe 1 indicator tops, and they're extremely simple. So it doesn't matter if you've been trading for 30 years or for 30 days. Everyone gets the same rules to work with, and then we just build it from there. Lastly, the most important thing, and really what I put a lot of emphasis on in my mentoring, is that trading should make you a part of the process. You never want to take yourself out of the game. You never want to, trade a system where you basically just follow the rules and have no idea why you're doing it, but just are blindly entering orders. You want to know what's behind the strategy, and you want to be able to alter it if the conditions change. If the market all of a sudden is extremely volatile, well, maybe you want to alter it to be a little bit more conservative. If it's pretty slow and you don't mind taking larger risks, say you've had a number of winning trades, well, you can take a larger risk. So you alter your entry, you alter your stop, you alter your exit. This is making you a part of the process, and that's what we teach you here, especially in the Stock College course. Okay, so let's recap once again. Here's what you'll receive in the Elite Stock Trading College: 6 weeks of trading tools and techniques, 2 proprietary stock strategies, our best in terms of consistency. The PET D, which is a full course within itself, we're offering you within the college. Nightly educational signal service. Now, we will provide you with signals once we feel that you understand the strategies, but these are educational so that you know what to look for. We teach you conservative and aggressive versions, and as bonuses, we're throwing in option trading class and the ATM class. These are like 2 special things we're throwing in. We've never had these before, but we're throwing them in so we can meet the needs of a lot of the traders. A lot of people have said, "Steve, I love your techniques and methodologies, but I only trade options." And we're also giving you the advanced trade management. This all comes with 39 years of trading experience, all right? You're not learning this from someone who's been trading for 5 or 10 years or who has a dream system that hasn't failed in the last year or 2. This is for someone who's seen the pitfalls of trading, who's been there themselves, who knows what to teach you in order to make you consistent. 39 years of experience. I will be your personal mentor. So here's what you get with the Elite Stock Trading College. Now, once again, once you get the strategies under your belt and through your guidance along with me, we see that you're starting to understand the rules. We do furnish you with educational signal alerts. Let me show you what we mean here. This is what you'll be receiving on an email basis. This is something that was actually sent out to our course members currently on the 5th, which was just a few weeks ago. You'll receive something very similar to this. This was an actual signals that were generated, and as you can see here, we had 3 sell signals generated that day, but I want to pay particular attention to BHI because this is something that doesn't happen all the time, but it's kind of rare. But when it does happen, it's a very, very high probability setup. That's when you get strategy number 4 and strategy number 8 generating the same signal. Once again, this doesn't happen all the time, but when it does, that is a very high level of consistency in that particular strategy. So we were generating both 4 and 8 were generating a sell signal in BHI on the 5th to be entered on the 6th. You would have received this after the close on the night of the 5th. And let's look at the stock here. Just judging by this, someone would say, well, Steve, there's really no range here. We're just kind of going sideways. Why would you want to short this? There's no news out on it. Remember, we don't care about that. We're only concerned with what the market is telling us. And according to the rules of strategies number 4 and number 8, it was telling us that this stock wants to go lower, all right, which you're going to learn all these rules in the college. Now, if you wanted to take it one step further, we could add the PET D. And remember, the PET D gives you the assurance that you're in sync with the short-term trend. So since we have a sell signal generated on the 5th, the PET D should be coloring that bar red. So once we add the PET D, well, we see that the PET D colored it red. So now we not only have 4, 8, but we have the PET D confirming that this should be sold. And if you would have gone short either that day or the next, well, that would have been 6 points in the next week in the desired direction. That's how simple it is. But remember, we only give you these signals for educational purposes. We're not a signal generating company where we want you to blindly take our signals. We want you to understand by knowing what to look for, and then ultimately you won't have to rely on our signal service at all. Remember, there's so much information jam-packed in our Stock College course that a year from today you will have wished you became a member of this course. If you've been struggling, if you've been really having difficulty trading, or let's say you were doing well until the market started to head south this last few weeks, and now you just don't know how to trade it because it's a totally different environment that you're not used to, now is the time to get on board because you can start seeing how you can trade any market, any direction, any time frame. Okay, so here's what we're offering all the attendees today. All this jam-packed information is usually costing thousands of dollars. In fact, it would normally cost you close to $5,000. We're dropping the price for all the attendees today down 10%, down to $44.95. But the best thing about this is that we're offering payment plans. Remember, this is a 6-week live course. So even though you can't come up with that lump sum, you can still make a payment plan with Pro Trader Strategies, and you can be up and running with us in the college as soon as it begins. And this includes the 1-year trade signals, but that's for a limited time only with this special deal. So here's how to sign up. Before we go to question and answers, contact Pro Trader Strategies. There's their email address and phone number, 310-598-67. And you see that link at the very bottom. That's the link that will take you directly to the sign-up page. Okay, if you want to go there, all you have to do is copy and paste that onto a browser, though, because that's not a live link. But if you look over in your chat box, excuse me, they've posted the live link right there under the chat box, and it will take you and give you more information just exactly about what we're offering and everything that's included within the course, okay? So I'm going to leave all this information up here so you can contact Pro Trader Strategies, possibly put together a trading plan and get that discount. And I'm going to open up the question and answer box, and thank you all for holding off with any questions, okay? Okay, Trenton asks, Mr. Primo, you say trading shouldn't be subjective, and then you say you must be a part of the process, which involves subjectivity. Well, Trenton, that's not exactly the same thing. When we say subjective, we mean more of a discretionary point of view. In other words, when someone, say some news comes out, jobless claims, say some economic report comes out, well, it's subjective as to how you're going to interpret that, okay? Someone would say, well, you know, that news that came out, that was really bullish. Someone else would say, no, 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 that's bearish, okay? That's very bearish. Well, that's what we're talking about. We don't follow things that leave room for interpretation, which is subjective. When we say becoming a part of the process, what we're saying is more of an insight, okay? By subjective, we're interpreting what the market is doing. We're talking about, we're only being interpreting what we want to do ourselves with what the market is telling us, okay? So if the market is telling us, according to what we teach you, that it's going up, well then we want to be a part of the process. How do we want to trade that particular setup? Do we want to trade it aggressively? Do we want to trade it conservatively? That's the part of the process we're talking about. The part of the process we're not talking about is trying to figure out what the market wants to do. That's where we talk about subjectivity, and that's the way most people trade. All of our techniques and methods are non-subjective. In other words, you'll know exactly whether you should be long or short. You'll know exactly where to enter once you learn our techniques. You'll know exactly where to exit. There's no subjectivity there. It's up to you how you want to apply that, okay? I hope that explains what you're looking for. Let's see, Trenton asks, with respect, every time I use any kind of discretion, I always end up losing money. And every time I follow my system mechanically, like a robot with no emotions, I tend to making money. Can you please comment on this? Well, remember, systems are robot-like, as you say, but it's been my experience with systems that they work great in certain market conditions. But when you get to a different market condition, because there is no human factor involved, that's when they blow up. I have traded systems. In fact, I've even taught systems in a firm I used to work for before. And each and every one of them eventually blew up. Okay, why? Because there was no part of the human factor. I would just knock on wood because, in my opinion, once again, I'm not trying to talk you out of trading if it's successful for you, but in my opinion, eventually there is a high probability that a system, the one you're trading, will blow up. But once you become a part of the process, you've increased your odds, in our opinion, that you're going to have consistency. So I would rather make my own decisions than blindly enter trades. In 39 years, I have not found anyone who has consistently generated gains over a substantial period of time by trading systems. But what I have found of a number of traders who are a part of the process, who use their own discretion in terms of how they want to trade, that have a very high level of consistency. So this is the only thing that works, in my opinion. Okay. Let's see. Shakir asked, I just purchased the PET D. Thank you, Shakir. Indicator, and do not enroll in the college. Does this rate change? You know, Shakir, we're not going to make you pay for the same thing twice, so don't worry about that. Contact Pro Trader Strategies, and they can set something up for you. Okay. But there will be no way that you'll have to purchase the same thing twice, since the PET D is being offered. As I stated, the PET D is a great tool, but it is simply a tool designed to tell you what the short-term trend is, and also designed to confirm specific setups. But it is not a trading strategy. So therefore, the beauty of the college is that you're going to learn how to use the PET D with specific strategies. Just contact your trading consultant at Pro Trader Strategies. They're my sister site. They market and promote all of my courses, and they can put together some type of a deal for you, okay? Shakir also says there's a big time difference between the USA and my country, so are the college's courses live? I have to decide how I will attend. Shakir, the college courses will be live, but we realize that not everyone can attend. In the past, we've had people in Switzerland, we've had people in Australia, we've also had people in other parts of Europe and the United States, all attending or all becoming members of the college course. But we know that because of the time zones, not everyone can attend. So therefore, just like today's presentation, we record everything. So if you can't make it because of the time zone, or let's say because you're working, we record everything, and you can always watch it at your own leisure. So that's one of the great things about the colleges. So even if you can't be there live, you can watch it the minute you are free, and then you can still contact me, correspond with me. Remember, once you purchase any of our products, you're a lifetime student of mine. You can correspond with me whenever you'd like, and I will always answer any question that you may have, okay? Nick says, isn't it best not to trade when important news announcements come out? In other words, get out of positions 15 minutes before and not trade until 15 minutes after. Nick, this is a great example of the way most people are taught. And I'm going to tell you, there's nothing wrong with that. Remember, we do not teach rules and tell you that, no, you have to trade this way, because that goes against our philosophy. But we in no way ever suggest that. In other words, we have traders who don't care about news events that trade during the news, myself included, and do just fine. In fact, today I had a buy setup prior to, I think there was some news announcement that came out today, this morning, prior to the opening, which, I mean, I don't even know what it was because I haven't looked at news in almost 40 years. But I believe the news announcement came out this morning, and I was long, and I ultimately made money being long. I don't care, because my strategy is what I have faith in. I really don't care about the news. So for me personally, I never even care about news. I don't look at news. All I look at what the market is telling me. Oftentimes, the news works in my favor. And if I'm long, if a news comes out and the community sees that as being bullish and everyone starts buying, well, oftentimes I'm already in before that happens. Now, having said that, do we say that every trader has to trade that way? No. Once again, we feel that no two traders should ever trade alike. So if you do not personally feel comfortable, if it doesn't make you in the perfect zone for trading 15 minutes prior to a news announcement, then don't trade. There's no rule that says you have to do that. Personally, it makes absolutely no difference to me, and our strategies have no connection with news at all, so we don't care if news comes out or not. Some of our best trades are prior to news events. But if you really feel uncomfortable, then by all means, go ahead and stay out. Okay? Shakir says, when the PET-D is installed in my Metastock software, will I be able to search for stocks that are in uptrend only using the PET-D? You know, Shakir, yes, I don't specifically use Metastock all the time, so I don't use it that way. But what we suggest is to look at always at a basket of stocks, especially in the beginning when you're first starting to learn any of our products. So only view like 10 or 20 stocks, maybe 30 at the most, that you're interested in. And then on a nightly basis, just go through those stocks. That way you don't have to search through hundreds and hundreds and hundreds of stocks every night. That's the best way. I'm sure there is a scan, and if you contact our tech support at Pro Trader Strategies, they'll be able to help you in that direction, okay? Gino asks, what kind of a payment plan do you offer? Well, Gino, once again, that's done through Pro Trader Strategies. They're very good at that. They'll work with you. Specialist Trading is just the educational division of the company. That's what I do. All I do is focus on teaching and mentoring students. I'm not involved with any of the pricing. So in order to structure some type of payment plan, all you have to do is give them a call. I'm sure they'd be happy to go over all the different options you can have for, you know, relatively small deposit, and you can be up and running and attending the courses. Now, I know a lot of people are wondering, well, when do these begin? We're trying, first of all, we want to see, you know, since we have people from all over the world, especially in today's presentation, we want to see when the best time is for everyone. So that's the reason why we don't come out right away and say it's starting next weekend, because we have people all over the world who you know, have different obligations, work, different time zones. So once we get a better idea of where our students are coming from, sometimes we have close to 50 students, all parts all over the world, then we can decide what the best day is and when we're going to begin. All I can tell you is it'll most likely be within the next 3 to 4 weeks, okay, that we will begin. But you will be up and running as soon as possible and be getting all the information, okay? Lou asks, news do not move markets, technicals get whipsawed. Well, Lou, once again, we don't care about news and technicals. All we care about is what the market is telling us. You know, our job as traders is just twofold. We want to listen to what the market is telling us, and then we want to jump on board. That's it. That's all our job is. Our job is not to follow the news. Our job is not to look at a ton of technicals and different head and shoulders and double bottoms and things. We don't care about that stuff. They're too subjective. Once again, everyone has room for interpretation with these different things. All we want to do are use cut and dry methods, all right, that have simple rules that will give you either A or B. There's no room for interpretation whether this is a support level, whether this is a resistance level, whether this is high volume, whether this is low volume. Everything is cut and dry. If they meet certain requirements, you know that the market is telling you with high level of consistency what it wants to do. Once we know what the market wants to do, then we put together some type of structure in the form of our methods and strategies to jump on board. And that's it. It's that simple. You don't have to overcomplicate your trading. Unfortunately, that's what most traders do. We've been taught that the more complicated your trading is, the higher level of consistency you'll have. And it's, in my 39 years, I found that it's exactly the opposite. The simpler your trading plan is, the higher level of consistency you'll get, okay? So keep things simple and you'll get on that road to consistency, okay? Last question, Shakir asks, will you be also teaching the Bollinger Bands and the MACD? No, we won't. We won't be touching those. We'll just be specifically, as you can see here, there's tons of information, and we don't want to make this into a 10 or 12-week course. There's just too much stuff. So we're giving you what we feel is the best of the best. That's our option course, that's the PET-D, that's strategies number 4, number 8, that's the ATM, and all these different edges, okay? So we're giving you what we feel is the best of the best. So, you know, if we added all these different other strategies, it would just be too much information. We just want to give you what we've seen over the years really have the highest level of consistency, okay? Gino asks, once again, is the teaching done only on live? Yes, you get recordings, okay? So this is all online recording or online live. So we'll either give live classes such as you're seeing right here over GoToWebinar, and you'll be able to see all the strategies and everything over the internet, or it will be recorded if you can't make that, and the classes, you'll just get a link and you can watch it at your own leisure. It'll be about an hour or a 2-hour class. Each week will be roughly an hour or 2 hours, depending on how many questions you have. Now remember, this is a class, this is a college, so you will be getting homework. This is not something where you're just going to go and say, okay, well, just tell me what to buy or what to sell. You have to be a part of the process. So I will be giving you homework to see how you're progressing. Remember, this is more of a mentorship. So I'm going to be your personal mentor with you all the way. Some people will be getting it very quickly. Other people will still take time. That's okay. All right, but I'll be there with you every step of the way, okay? As we go into the close here, remember, Pro Trader Strategies handles all the basics for purchasing, for discounts, for payment plans. If you have any questions, feel free to just to contact them, to call them, or send them an email. There's no obligation at all, and you can get a lot more information. Or if you're currently a customer, I believe, as Shakir said, who purchased the Pet D and you want to become a member of the course, just simply tell them your situation, and they'll be happy to work with you. And obviously, you're not going to get charged twice for the same thing, okay? I want to thank you so much for attending today. Thank you so much for taking time out of your Thursday morning. I look forward to all of you becoming students of mine and becoming members of the Stock College. Thank you so much. I'll see you next time. Bye-bye.